I'm just making an educated guess here, but I think having a new president may impact our housing market in 3 different ways. Hang with me while I kind of walk you through the potential of what could happen as we move into the new Trump administration and out of the Biden administration. Number 1 is our economy. So our economy has a major impact on the housing market. Well, Michael, why does the economy impact housing? Well, first of all, you have the psyche of the people who are going to be buying or selling a home. If they feel like they're struggling or they see a period of time coming in their lives where things might be a challenge, then that can certainly impact their likelihood of doing something with their home. Maybe they don't sell, maybe they wait to buy, maybe they keep renting. There are a lot of options that could happen. Maybe they stay at home in their parents' basement instead of buying their own home. All of these things can be dictated by what happens with the economy. There are a lot of outside factors, and this is not political commentary. So please understand that. Whatever side of the aisle you're on, there are things we can look at and learn from in the last 8 years. Most people in the last 4 years would look back and tell you that financially things are more difficult for them than they were in the 4 years preceding that. So 8 years ago, we elected Donald Trump. 4 years ago, we elected Biden. Now we're going back to Trump. Most people think conservatives in general, Republicans in general, and Donald Trump specifically are going to be much more pro-business. They're going to try to do the things that stimulate business, whether it's tax incentives that they have definitely talked about, whether it's trying to control the products that come in and possibly tariffs on it to improve our economy so that U.S. goods are being purchased. No matter what you think about these things, I want you to understand that as a general rule, most of the people that look at the next 4 years from an economy standpoint think there's a good chance it will improve under Donald Trump. So if our economy improves over the next 4 years, that's likely going to lead to the housing market improving. As people feel good about their job security and the likelihood of getting raises at work and being able to sell more of the product that they have, they get excited and they want to look at buying a house. So that's the number 1 way I think this new presidency will impact the housing market. Number 2 is similar but different, and that's how this presidency will impact mortgage interest rates. Now this one's really tough because if you think about interest rates are set not by the Federal Reserve. When you hear the Fed chair come out and he cuts interest rates, that is not mortgage rates. They're related, but they are in no way, shape, or form the same. Our interest rates are set by Wall Street. And when Wall Street things are going really well in that same economy we just talked about, they're moving money from conservative investments like mortgage-backed securities into more risky investments like stocks, hoping that those stocks will go up faster than the return would on their mortgage-backed securities. So actually, an economy that is growing can be a bigger challenge to mortgage rates than an economy that is struggling. So what I want you to understand is there's at least a chance that under Donald Trump, mortgage interest rates stay at these what we consider elevated levels or go up. Now that they also could come down. There are a lot of policies out there that Trump has talked about and could enact that could push rates down. For instance, one of the biggest issues we have in inflation is fuel prices. Well, Donald Trump has already talked about opening up a pipeline that would, at least in theory, lower fuel prices for the average person. So lowering fuel prices lowers the cost of living. That's better, and that could potentially improve rates as the consumer feels more freely to spend. So number 1, the economy in general. Number 2, interest rates in particular. Number 3, and this is more of uncertainty, housing incentives. If you'll remember, Donald Trump's opponent talked specifically about a massive incentive to help you purchase a home. She was talking about $25,000 for first-time home buyers to use as a down payment on a new house. which sounds great in theory, and I'd love to see that as a mortgage guy, and you'd probably love to see that as a home buyer. Now, would our future generations want to see how that's going to impact our national debt? Who knows? What I do know is Donald Trump understands how important housing is to our overall economy, and he's going to want to take some steps to make sure that our housing market remains strong. So I think you'll see them at least have some conversations about how financially they can help buyers of homes be able to move forward. Interest rates are a big deal, and a lot of people are uncertain whether interest rates are going to come down or not. Those incentive programs may help people get over the hump and make them more willing to take the risk now. So we have a new president coming in. He'll start in just a few months, and he'll quickly tell us about the items that he wants to push through. This is a unique time in that the Republicans are going to control the presidency, the House, and the Senate. So there aren't going to be a lot of checks and balances. One thing you need to understand about that creates uncertainty for Wall Street. Wall Street actually doesn't like it when one side of the aisle controls all three, because they know they can push anything through that they want to push through. So Wall Street may be a little more hesitant to go aggressive into stocks. They may stay in bonds, and a bigger supply in bonds means mortgage rates are lower. So there's a lot of variables, and it's really tough to predict. Most of your people who've been doing this for decades don't even have a good feel for where things are going to go. But what they do generally agree on is economy will improve under Donald Trump, and that typically leads to a stronger housing market. So we'll see what's going to happen over time. What I would tell you is, if you've been on the sidelines, you've been thinking about buying, but you either wanted to see a resolution in this presidential debate and race, or you've been on the sidelines because you think rates are inflated, I would tell you, take the risk now. Get back in the game. You know who the president's going to be. The rates are what the rates are. If you purchase now and rates go up, you've secured your position where you're at. If you purchase now and rates go down, you can always refinance later. You can take advantage of those lower rates through a refinance that Weber Mortgage will be happy to help you with. So if you've been waiting for a presidential election, or you've been waiting for mortgage rates, forget about them. It's time to move forward and purchase that house you've been thinking about. If you need help walking through this process, that's what we do. Weber Mortgage, we are a family in the business of helping families just like yours.